Is AP Møller Maersk a deep value or a value trap? We're going to analyze the company like Warren Buffett. We're going to look at the company's most telling numbers before we use 3 ways to estimate their fair value. You're going to want to watch till the end of the video because their fair value and our final rating may come as a surprise. Along the way, there's going to be a key bonus metric. It just might be the tipping point when analyzing Maersk for your stock portfolio. So is Maersk a potential opportunity? Right now, they trade for $7.20 per share. We're looking at their over-the-counter US listing, stock ticker AMKB.Y. This year has been very rough on shipping stocks. While the S&P 500 is up more than 13%, the company stock is down 37%. That's not all for shareholders. Maersk has paid over a 30% dividend yield based on today's prices in their last 12 months. But are their dividends safe in the future? We'll learn more later in our video, so stay tuned. Returns to shareholders are down, but they're not as bad as in their stock price alone. In the last 5 years, it's a different story. Their stock compounds at 3% annually, plus their dividends. In the last 10 years, they underperformed the market. They've declined 28% overall. When we go back to see their US listing 11.5 years ago, Maersk stock is up 27% overall. They compound at 2% annually, but they underperform the S&P 500. But the burning question is, why should we be paying close attention to the business? Maersk trades almost at its 52-week lows, just 20 cents above that. They trade $5 below their 52-week high. How big is Maersk? While ticker says they have a $17 billion enterprise value, this is actually $30 billion. It's a mistake where it looks like ticker is adding in negative net debt for the company, when in reality they do have some debt. We'll cover that in more depth later on. So what does the company do? AP Møller Mærsk is a Denmark-listed global conglomerate involved in global trade, shipping, and energy. Maersk Line, the largest contributor to group revenue and earnings, has been the largest container shipping company globally for more than 20 years. Maersk was founded in 1904 and has since been run by the Møller Mærsk family, which currently holds slightly more than 50% of the shares. The group has been active over the past few years in divesting non-core operations, such as its long-standing stake in Danske Bank and Dansk Supermarket, as well as its oil and gas operations. Now with that understanding, let's dive deep into their numbers. Metric number 1, we want their average returns on capital to be above 14%. This is going to be interesting as their returns have skyrocketed in the last couple of years. These were at an abysmal 1% in 2018. In 2022, they nearly earned 38% returns on capital. How are we seeing such drastically different results? The answer is that shipping is a very cyclical industry. They have a big boom and bust cycle in part to a lag time for supply in the industry. This period includes a huge boom since 2020. In this time, Maersk has grown their returns on capital from 1% in 2018 to 38% in 2022. These have been steadily climbing in all 5 years. When they're averaged out, Maersk earns 16.5% average returns on capital in a given year. That's more than double an average business. It's above our benchmark. This means this is a check on metric number 1. Keep in mind, in their last 12 months, these returns have dropped to 12.8%. This is as we've seen shipping spot rates come down. It's something that could impact this business and the shipping industry as a whole. Metric number 2, we want growth in their sales, earnings, and free cash flow. This is all or nothing. In this time, Maersk has benefited from growth in their sales. These are up 45% today. Their earnings have almost tripled, and their free cash flows have more than tripled in this time. That's huge growth for the business as shipping saw a boom in the last couple of years. This is a big check as this growth supports their high returns on capital, especially recently. Metric number 3, we want earnings per share growth. This looks at Maersk from the view of an individual shareholder. These numbers are off on ticker as it trades over the counter. Still, they're going to be directionally correct for Maersk. In this time, not only has the company almost tripled their earnings, they've also bought back 17% of their shares outstanding. These big buybacks and this earnings growth means that they've grown their earnings per share. It's a check on metric number 3. Keep in mind that a lot of these buybacks occurred at high prices for the company. This was likely as a way to return capital to shareholders, but the company's stock price has dropped by a lot since then. You'd want to look to see whether they're keeping up these share buybacks, but if a company buys back at above their fair value, it actually destroys value for shareholders. That's why our fair values in this analysis are so important. Still, it's another check on metric number 3. Maersk is perfect so far. Metric number 4, we want free cash flow per share growth. This is almost the same story as our last metric. With these big share buybacks and their per share metrics being off in ticker, again, this is going to be directionally correct. This is yet another check on metric number 4. Maersk is still perfect. Before we look at the company's balance sheet and get into our valuation estimates, why don't we check in on our bonus? Right now, Maersk pays an insane 30% dividend yield, but is their dividend safe and can this grow in the future? That's what we want to figure out in our bonus. Maersk has grown their dividends in all 5 of these years. They paid out $6.9 billion in dividends in their last year. This comes even as the company has been buying back shares. In their last 12 months, they paid out more than $10 billion in dividends. This comes as the company has an enterprise value of just $30 billion. So these are huge returns to shareholders. They've also supported their dividends throughout this time, which is what we want to see. This is a check on our bonus. With the cycles in the shipping industry, you really need to understand the durability of their free cash flows going forward. This is a type of industry where there can be these huge booms where there are very high highs, but these can be followed pretty quickly by very low lows. Times where shipping companies are burning a lot of cash. The lag time to get new supply of ships is historically part of the reason why this industry is so cyclical. You need to have an insight into the shipping market to understand if these free cash flows and if these dividends can continue into the future or not. Keep in mind they've increased their dividend by a ton in the last couple of years. This is way above where they were at even coming into 2020. It's more likely the company would revert to historical numbers rather than keep these huge numbers up in the future. But that's not a guarantee either. In recessions, it's businesses with too much debt that can have the biggest losses and even go broke. Metric number 5, we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of their free cash flows in their last 5 years. This is where some of the information is off for this ticker. Right now, Maersk actually has net debt. This is why they have an enterprise value of $30 billion, even though their market cap is $23 billion. In the last 5 years, the company has produced $63 billion of free cash flow, more than their enterprise value today. That easily supports their debt loads over this time. It's a huge check on metric number 5. Flawless through our first 5 metrics, does AP Møller Maersk have what it takes to go 6 for 6 on our analysis and be a perfect select 6 stock? How about we find out? The big metric of them all, we want their average free cash flow divided by their enterprise value to give us a yield that's above 5%. This is the first of our valuation metrics. It estimates their fair value like a private company. And if this is the case, it gives a slight risk premium to the 10-year treasury. We learned in their last 12 months, they produced $63 billion of free cash flow. This means they produced $12.6 billion in an average year over this time, although half of their free cash flow came in 2022 alone, and that's been coming down in their last 12 months. Right now, they have a $30 billion enterprise value. When we divide their free cash flows by that, we get an insane 42% average free cash flow to enterprise value yield. Currently, Maersk produced $14.4 billion of free cash flow in their last 12 months. When that's divided by their enterprise value, we get another insane 48% current free cash flow yield. These are both far and above the yield from the 10-year treasury. They blow those treasury yields out of the water. This means Maersk has done it. They're a perfect select 6 stock. It's a check on metric number 6. Don't just run out and go buy the business. You're going to want to watch for what their other fair values are before we combine these together at the end of our video. Everything we've covered so far is important, but there's something missing. This, in my opinion, is the main reason to analyze Maersk. It brings us to use a discounted cash flow model to estimate their fair value per share. This is going to be a rough estimate for the company as they have not been predictable in their past and the shipping industry is so cyclical. We're going to start with an average of their free cash flows from before the pandemic, when their free cash flows really went through the roof with an overall boom in the shipping market. Then we're going to take historical assumptions to grow these into the future. It's up to you to figure out if they'll be accurate or not. If we assume they grow this pre-pandemic average of their free cash flows by 2% in each of the next 10 years, then in the following decade, we'll assume that this growth is flat. This doesn't have to be a straight line up and to the right for the company. It could be all over the place, but this will be our average. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, at today's valuation multiples, an estimate of their fair value is just under $12 per share. That's $5 above their current stock price. It's pretty close to their 52-week highs. Keep some key points in mind. The company's dividend yield would not be doubly counted in this. If they are paying out an insane amount of cash flow to shareholders, their stock price wouldn't go up by this full amount. Also, it's cyclical companies that you need to be the most careful with. You really want to avoid paying peak multiples for peak earnings. Thankfully for Maersk shareholders, right now they trade at some pretty low multiples, but they may be on peak earnings. So you definitely need to normalize these in order to have a better grasp of the company. We're also going to take Guru Focus's fair value from Maersk. Right now this comes in just under $15 per share. This suffers from some of the same lack of predictability. It values the company based on that, their historical multiples, and analyst estimates for the future. So it gives us another perspective on the company. Now, the moment you've been waiting for, let's combine these as we give a total fair value from Maersk and give our rating. We've learned in our stock analysis of AP Møller Maersk, which trades over the counter under the stock ticker AMKBY in the United States, that they're a perfect Select 6 stock. They earn above average returns on capital, they've grown alongside a shipping boom, they've also bought back 17% of their shares, they produce a ton of free cash flow, much of which they've returned to shareholders through their huge dividends. We also performed a DCF analysis and looked at a Guru Focus estimate for the company, both of which were rough as they have low predictability in an industry with a lot of booms and busts. You need to ask yourself when these estimates may be rougher for the company and when you should especially be careful. It's in situations like this where very cyclical companies at their peaks can actually look very cheap based on the numbers compared to where they've been at historically, and at their lows, when it's actually the best time to buy them, look pretty bad based on the numbers. You just need to be careful and do your homework. Keep in mind this isn't financial advice. Still, when we combine these estimates, it looks like Maersk's fair value is around $18 per share, assuming their free cash flows don't take a complete nosedive in the coming future, which that could happen. You need to have some sort of special insight into the shipping industry to understand whether or not this is a huge concern for the company. These cyclical companies can cause investors the most trouble. Right now, Maersk has a street target price of just $6.40, so that goes in the opposite direction. Maersk may be an excellent candidate for more research. If you enjoyed today's stock analysis, like it, subscribe to the channel for more, and watch this next video on screen.